Hello everyone, welcome back to Fundrise Finance. 2022 so far has been a very down year for the stock market. None of the major indices have been spared. The S&P 500 is down 11% year to date. The Nasdaq has fared much worse, was almost 18% down year to date. And the Russell 2000, which is made up of mostly the small caps, is down 13% year to date. One common pattern among these indices is the roller coaster ride that you can see. With all the talk about Fed rate hike increases and the inflation and the Russia-Ukraine war, the market never gets a single moment of news to keep the trend up. The moment market tries to find some good ups, we see a massive dip. Then again up and then down. So it's been a roller coaster towards the downside. These are the situations that demand investor to invest money wisely. Make use of the opportunity to invest into the stocks that have been beaten down but still have good fundamentals that provide a long-term growth aspect. In this video today, we will discuss about 5 such stocks which are at a very good value at the moment, offer good dividends and also a nice dividend growth rate. Let's check them out. But if you are new here, consider subscribing and hitting that bell so that you don't miss a single video packed with valuable information just like this one and help grow this young channel. The first company that we have is Best Buy, ticker symbol BBY. Best Buy is a technology products retailer company and has seen a big decline in the last 1 year. Here we see in the last 1 year it has given minus 13% returns. Year to date it has given minus 3% returns. Here we can see Best Buy falling almost 28% from its all-time high. Best Buy currently offers a dividend yield of 3.55% and it has a very low PE of 10.97. It has an amazing 5-year growth rate of 20.1%, which is really good and is more than double the current inflation of 7.95%, which is really good because the dividends that you earn don't get eaten up by the inflation. It has been growing dividends for the last 8 years. Track your dividends has a score of 63 for Best Buy. Here we can see Best Buy declaring an increase of almost 26% just a few weeks ago and a similar increase in the last year. So the dividend increases are pretty constant and are huge. The valuation metrics that Tractor Dividends uses is very crude. It averages the price to earnings method and price to sales method, and the average of these two is what it considers as a fair valuation. But as per my own dividend theory calculations, I found Best Buy to be 15% undervalued with a fair price of $114 and providing an average growth of 14% over the next 5 years. In the world of e-commerce, where Amazon is giving every brick and mortar company a run for its money, Best Buy is able to hold its own and deliver good results. Best Buy has a next dividend date of March 23rd. So if you want to get dividends from your investments in Best Buy, one has to make purchase in Best Buy before March 23rd so that the dividends can be paid out on April 14th. The next stock on our list is American Tower Corporation, ticker symbol AMT. American Tower Corporation is a real estate investment trust that manages cell towers for all the leading telecommunication providers. Year to date, American Tower Corporation has been really beaten down of almost 18%. In the last 1 year, it has given 8% returns. In the last 5 years, a spectacular 105%. Here we can see American Tar Corporation falling almost 22% from its all-time high in the last year. It has a market-beating yield of 2.37% that is growing at a 5-year growth rate of 19.14%. And here we see the dividend paid consecutively for the last 9 years. Track Your Dividends has a dividend score of 51 for American Tar Corporation. Here we see a nice uptrend in the dividend per share provided back to the investor. And the good part about American Tar is that it raises its dividends every quarter. The most recent increase has not been that great of just 0.72%, but as you can see in the past, it has been giving a good dividend increase for every quarter, which means the dividends keep on increasing regularly. Track Your Dividends calculates American Tar's valuation to be 34.5% undervalued. But like I said earlier, I really don't go with the calculations here. As per the dividend yield calculations, I found AMT to be 23% undervalued with a fair price of $291 and providing an average growth of 23% over the next 5 years. AMT has the next ex-dividend date of April 12th, so investors buying into AMT before this date would have their dividends paid out by April 29th. American Tar Corporation is a really good REIT to buy into. It has a market beating yield that grows at a very good rate and offers a very good growth potential. If you've liked this video so far, I would really appreciate if you could hit on the like and subscribe button so that YouTube can suggest this video to many more others like you. The third stock on our list is Air Products and Chemicals, ticker symbol APD. Air Products and Chemicals is an industrial company from the material sector. It provides industrial gases for the industrial manufacturing processes. Year to date, APD has really been beaten down of almost 25%, and in the last 1 year, it has given minus 18%. Here we can see APD falling almost 29% from its recent all-time high. It offers a very good yield of 2.91% and has a relatively low PE of 21.53. The dividends grow at a healthy rate of 12.63%, and it has been giving its dividends for the last 39 years. So APD is a dividend aristocrat. Track Your Dividends has a score of 81 for Air Products. Here we see the dividends per share increasing nice in an upward trend. And here we can see the dividend increases that Air Products had announced in the recent past, with the most recent being an 8% announced just recently. Track Your Dividends considers Air Products to be almost 30% undervalued, but as per my own dividend calculations, I found Air Products to be 20% undervalued with a fair price of $267 and offering an average growth of 18% over the next 5 years. Anyone investing into Air Products before March 31st will have their dividends paid out on May 9th. Air Products is a really good dividend aristocrat that one should own in their portfolio. It has really got beaten in the recent past, and one should make use of this opportunity. The fourth stock we have in our list is T. Rowe Price, ticker symbol TROW. T. Rowe Price is a financial asset management company which really has got hammered by almost 28% year to date. Here we can see T. Rowe Price falling 37% from its recent all-time high. T. Rowe Price offers a dividend yield of 3.51%, which is really good. And these dividends are growing at a really good rate of 15.18%, which is almost double that of the current inflation. And the dividend growth has been for the last 36 years. So T. Rowe Price is again another dividend aristocrat. Track Your Dividends gives a score of 68 to T. Rowe Price. The historical payment data that we see here gives an incorrect picture in my opinion, because it shows 64% reduction in the recent payout, but that's not correct because T. Rowe Price had a special dividend that it paid in the June of last year, and after that it continued paying its regular dividends. Track Your Dividends considers that drop in payment as negative, which is incorrect way to see it. We here see T. Rowe Price being almost 40% undervalued, but as per my own dividend theory calculations, I found T. Rowe Price to be undervalued by 20% with a fair price of $167 and offering an average growth of 20% over the next 5 years. T. Rowe Price is a really good dividend aristocrat that one should own in their portfolio. It has good fundamentals, offers a really good dividend yield that grows at a very good pace. The fifth and final stock in our list is Morgan Stanley, ticker symbol MS. Morgan Stanley is a multinational financial bank and investment services company which has taken a big hit this year. It is down almost 14% year to date. In the last 1 year, it has returned just 3% returns, whereas in the last 5 years, it has given almost 88% return. Here we see Morgan Stanley falling almost 21% from its recent all-time high. Morgan Stanley offers a very good dividend yield of 3.24% that grows at an amazing rate of 26.7%, which is three times the current inflation rate of 7.95. Track Your Dividends gives Morgan Stanley a dividend score of 75. Here we see the dividend per share going in a nice upward trend. Here we can see the historical payments, and Morgan Stanley had increased the dividends by 100%. That is, they doubled their dividends last year, and before that, they were increasing at a nice pace of almost 20%. If one were to look at a really good bank stock to add to their dividend portfolio, then Morgan Stanley should be in their watch list. It provides a very good dividend that grows at a very good rate and has solid fundamentals. So these are the five dividend stocks that one should consider buying into at this opportune moment. All of these five companies offer very good dividends that grow at a very good rate and offer a very good growth potential in the years to come. I'm not a financial advisor, and everyone should do their own due diligence before investing their hard earned money. Thanks for watching. See you in the next video. And until then, let's try as much as possible to be financially healthy. Thanks. Bye.